Most investors are staring at the price chart and seeing a ghost town. They see an asset that is chopped sideways while others ran, and they assume the opportunity is dead. They are wrong. While retail traders are complaining about volatility, the infrastructure of the global financial system just quietly integrated Chainlink. I'm not talking about a generic partnership announcement. I'm talking about the Bank of England and the world's largest derivatives exchange going live in the same week. The price is sitting at historical support, but the fundamental reality has completely decoupled from the chart. If you are waiting for a green candle to validate your thesis, you are already too late. Welcome back to Crypto Yield Pro. Right now, Chainlink is trading between $8 and $9. If you look at the last 4 weeks of price action, it feels heavy. Sentiment is in the gutter. We have seen a flush down to $8, creating a lot of fear in the market. People are looking at the 200 simple moving average on the weekly time frame, seeing price rejected below it, and they are capitulating. But here's the thing about market structure. It's designed to transfer wealth from the impatient to the strategic. The founder of Chainlink, Sergey Nazarov, said it explicitly just a few days ago. Cycles are a normal part of the crypto industry. He is right. When you look at the broader market, with Bitcoin and Ethereum seeing their own corrections, Chainlink holding this $8 level is not weakness. It's a stress test. This is exactly where the sophisticated money starts paying attention. We are seeing a massive divergence. The price is suppressing, but the utility is exploding. Most people buy when the news is already priced in. We are going to look at why the smart money is positioning itself right here, right now, before the crowd figures out what happened in February. Let's look at the hard data, because the narrative has shifted from crypto speculation to global settlement. First, and this is arguably the most significant update we have seen in years, the Bank of England, yes, a G7 central bank, has selected Chainlink for its synchronization lab. This is not a marketing gimmick. This is about synchronized settlement between central bank money and on-chain securities. We are no longer talking about getting price feeds for a DeFi protocol. We are talking about the plumbing of the sovereign financial system. When a central bank tests your infrastructure for settlement, you have moved beyond the crypto casino. You have become a utility. Second, look at what happened on February 9th. CME Group, the largest derivatives exchange in the world, launched Chainlink futures. These are CFTC-regulated contracts. Why does this matter? Because institutional capital cannot just buy tokens on a decentralized exchange. They need a regulated rail. By launching futures with both large and micro-sized contracts, the CME has essentially validated Link as a commodity. This opens the door for the kind of capital that measures its position size in the billions, not millions. Third, we have to talk about revenue. If you look at the competitive landscape for interoperability over the last 180 days, Chainlink generated $28 million. Do you know what the competitors generated? Axelar? 0. Layer 0? 0. Chainlink has an 86% market share in revenue and a 99% market share in Oracle value recapture. This smart value recapture is a sleeping giant. In the last 10 days alone, they recaptured $7 million in value from liquidations. This is high-margin, non-toxic revenue that makes the protocol sticky. And finally, look at the treasury. The protocol itself has been a consistent buyer of the Link token, accumulating 1.9 million tokens worth over $16 million. When the project is buying back its own supply during a downturn, that creates a fundamental floor. They are removing supply while institutions are building on-ramps. Now, let's strip away the news and look at the raw price action on the weekly chart. I want you to focus on the $8 level. This is not a random number. This $8 zone was the wick liquidation back in October, and it aligns perfectly with the accumulation zones of 2022 and 2023. Resistance has flipped to support. We are retesting the breakout level of the previous cycle. As long as the weekly candle bodies close above this green box I have drawn between $7 and $10, the long-term bullish plan remains intact. However, we have to respect the trend. We are currently trading below the weekly 200 simple moving average, which is that green line on your screen. That is acting as dynamic resistance. We also have a descending trend line, the orange dotted line, coming down from the local top of $26 in August 2025. That trend line is squeezing price against support. This is a classic compression pattern. Usually, when volatility compresses this tight at a historical support level, the subsequent move is explosive. But here is the indicator that gives me the highest conviction. Look at the Heikin Ashi RSI at the bottom of the chart. I have circled the white points for you. Every single time this indicator has hit these oversold lows in the history of Chainlink, it marked a generational bottom. We saw it in the bear market lows, and we are seeing it again right now. It is the most oversold reading in history. When you combine a historical support level at $8 with a historically oversold momentum indicator, the probabilities skew heavily to the upside. We are also watching the Fibonacci levels anchored from the $31 high down to the $8 low. The first major resistance is the 236 level at $13. If we reclaim that, the air is thin up to $26. The selling pressure seems to be drying up for now. You can see that the red candles are becoming smaller. The sellers are exhausted. They have flushed everyone out who was going to sell. Who is left? Holders and accumulators. So, how do we trade this? I'm not here to tell you this is going to the moon tomorrow. I'm here to manage risk and capture yield. My strategy is simple. I'm treating this zone between $7 and $10 as my primary accumulation box. This is where I am building my long-term position. Chainlink currently makes up 5% of my total portfolio, sitting alongside my core Bitcoin and Ethereum holdings. If you are a short-term trader, the invalidation level is clear. If Link get a sustained weekly close below $8, breaking that support, you should reassess. But, in my honest opinion, as long as we hold this shelf, I'm looking higher for 2026. For take-profit targets, I'm scaling out into strength. I'm not waiting for $100 to sell everything. That is how you round-trip your gains. My first target is $13. This is the 236 fib level and a psychological resistance. I'll trim a small percentage there to lock in risk-free capital. My second target is $16. My third target is $19, then $22 and $26. If we get a massive blowout top, I have a final moonbag target at $45, but I'm not counting on that for my trade to be successful. I'm also keeping an eye on the DeFi yields. Right now, on Uniswap v3, the Link Ethereum pool is paying around 44% APY on the last 30 days, and the USDC Link pool is paying about 41% APY over the same period. These are high yields, but be careful. The total value locked is relatively low, under $400,000 in those specific pools. This implies volatility. If you are providing liquidity, ensure you understand impermanent loss, because if Link creates that explosive move we are expecting, you could sell your upside too early. Personally, for now, I prefer to hold the spot asset or use single-sided staking where available to avoid getting shaken out. So, my thesis is straightforward. The price is boring, but the plumbing is being overhauled. We have the Bank of England and CME entering the picture at the exact same time, prices testing a multi-year support level with oversold momentum conditions. The market is giving you a chance to buy a critical piece of financial infrastructure at the same price as 2022, but with 10 times the fundamental adoption. I'm accumulating here. I'm patient, and I'm letting the data, not the emotions, drive the decision. If you want to see exactly when I pull the trigger on these buys or sells, I post all my real-time moves in my free Telegram group. There is a link in the pinned comment below. It's the best way to cut through the noise on a daily basis. Also, if you want to understand the deeper mechanics of the cross-chain interoperability protocol, watch my previous deep dive video on the screen right now. It explains why the banks are choosing this specific tech stack. Keep your capital safe, respect the risk, my videos are never financial advice, and I'll see you tomorrow in the next one.